Hi, welcome to the Office of Tax Appeals. I want to thank everyone for attending today. My name is Josh Lambert, and I'm the lead administrative law judge for this hearing. My co-panelists today are Kim Wilson and Greg Turner. All three of us will meet after the hearing and produce the written opinion as equal participants. Before we go on the record, I want to discuss a couple of things. The Office of Tax Appeals is not a court, but an independent appeals body. The office is staffed by tax experts and is independent of the state's tax agencies. Also present is our stenographer, Ms. Alonzo, who is reporting this hearing verbatim. To ensure we have an accurate record, we ask that everyone state their name before they speak and that everyone speaks one at a time, and also do not speak over each other. Please speak directly into the microphone and mute your microphone if you're not speaking. Also, please speak loudly and clearly. When needed, Ms. Alonzo or the panel will stop the hearing process and ask for clarification. After the hearing, Ms. Alonzo will produce the official hearing transcript, which will be available on the Office of Tax Appeals website. So, were there any questions before we go on the record and start the hearing?
No.
Okay, and Ms. Alonzo, are you ready to proceed? Okay. We are now on the record in the Office of Tax Appeals oral hearing for the appeal of Zara Sultana, case number 221212128. The date is July 24th, 2025, and the time is 2:08 p.m. My name is Josh Lambert, and I'm the lead administrative law judge for this hearing, or lead panel member, and my co-panelists today are Judge Turner and Hearing Officer Wilson. So before we begin, can the parties introduce yourself for the record? CDTFA?
Mari Guzman, attorney for the department.
Chad Backus, attorney for the department.
Jason Parker, Chief of Headquarters Operations Bureau with the department.
Thank you. And for appellant, could you please introduce yourself for the record?
Mader Shahati, representative of Zahra Sultana.
Okay, well, thank you all for attending. As previously discussed, the issues are whether appellant has shown that adjustments are warranted to the audit liability and whether appellant is personally liable for the unpaid sales tax liabilities of ARC and Associates for the liability periods pursuant to Revenue and Taxation Code Section 6829. CDTFA provides exhibits A through L, and appellant did not submit any exhibits, and there were no objections to the exhibits, so that evidence is now on the record. So, Mr. Shati, this will be your opportunity to explain the appellant's position, and as discussed, you have 20 minutes, and you can proceed when you're ready.
Okay, Art and Associate, I can start. Art and Associate is a corporation that does business of selling taxable and non-taxable items. The audit period is July 1st, 2014 to June 30th, 2017. When I start involving in the case, it was already proceed, and there was a paper that was received from the accountant that they say that these are the taxable sales. After discussing with basically my client, they said no, this paper does not belong to them, and any non-taxable items were sell for resale. And I communicate with the department, I appeal the case, and I told them this is what is going on. They say you need to bring sale for resale certificate. And that's why, by the way, the record 300 pages, they are like double or triple the same thing. They're just repeating it twice, 3 times, or 4 times. I don't know why. But when they say 300 pages, I went through them and they are just a repetition of the same thing over and over. So maybe next time they should just Basically, just put whatever there instead of just duplicating. The sale for resale certificate is on page 318. And if you look at the page, the sale for resale certificate, it was accepted in a good faith and all the element is in it. So any non-taxable sales belongs to, I think 379,000 belongs to this sale for resale certificate, and I think the court should accept it or the judge should consider it. The other items was like credit card charges or some other items that's not taxable. So I'm disputing all the liability regarding this tax liability. Now, the company was closed in November 2018. And since that date, there was no activity for that company and there was no money basically for that corporation since 2018. So probably 8 years ago. That's regarding this liability. Now, regarding the company, my client being responsible for the tax liability, my client is a housewife that she did not participate in any activity for the corporation. There was a manager who deals with the store, and there was an accountant who deal with the books and records. So she was basically the silent partner for the corporation, even though they identify her in the record that she filed the sales and use tax return. This is automatically when you put the name of the company, the president of the company or the CEO, the name will appear on the return. If you look at the books and records, the one that they show 300 pages, none of them has her signature on them. Some of them, when they say, oh, this is like waiver, because there is no other people that they sign, basically, she signed the waiver for limitation when they submit it. And we asked her to do that because that's the only person basically on that corporation at that time. So basically, she's not involved in any of the daily activity or the sales activity for the corporation. Therefore, she is not the responsible party for that corporation. That's all.
Thank you, Mr. Shatit. I will turn to the panel to see if there's any questions. Hearing Officer Wilson, did you have any questions?
I'm going to hold my questions until after CDTFA's presentation.
Okay. And Judge Turner, did you have any questions?
I'll wait as well. Thank you.
Okay. And I had one question. I was wondering, is Miss Sultana, was she the only officer was she a president? Because you said there was a manager. So I'm trying to understand what her position was compared to this manager.
When they file the corporation, they file as she's a president. But the store has a manager and the store has a bookkeeper that they deal with all the daily activity and the taxes. So basically, she never been to the store to be involved in any kind of sales or any kind of collecting taxes or paying taxes.
Okay. And she was the only officer, and was she the owner?
Per the records, because I was not involved, yes, per the public record, she is the president of the company.
Okay, I was just confirming. Thank you.
You're welcome.
Okay, well, now we can turn to CATFA's presentation. So, Ms. Guzman, if you wanted to proceed when you're ready for 30 minutes.
Yes, thank you very much.
Okay, you can proceed.
Great. Good afternoon. At issue in this case is whether adjustments are warranted to the audit liability of ARC and Associates, a California corporation operating 2 men's clothing stores in San Jose, California, which we will refer to as ARC from here on out, for the period July 1, 2014 through June 30th, 2017. This is the audit liability period. Also at issue in this case is whether appellant, Zara Sultana, is personally liable for the unpaid sales tax liabilities of ARC for the audit liability period, the fourth quarter of 2017, the third quarter of 2018, and for the period October 1st, 2018 through November 15th, 2018, pursuant to Revenue and Taxation Code Section 6829. We will first discuss the issue of whether adjustments are warranted to ARC's audit liability. As discussed in Exhibit F, for the audit, ARC provided its federal income tax returns for 2014, 2015, and 2016, bank statements for the audit liability period, and daily worksheets for both stores. The daily worksheets were provided to the department by ARC, which are based on its daily Z-tapes. Reconciliation of the federal income tax returns, bank statements, and daily worksheets all disclosed material discrepancies. Therefore, the department determined the audit liability based on differences in taxable sales reported in its sales and use tax returns of around $277,000 and recorded taxable sales per ARC's daily worksheets of over $1 million, resulting in an understatement of more than $787,000. During the audit, ARC contended that the additional taxable sales were due to non-taxable items, such as non-taxable sales for resale of $398,000 to Mohammed Junaidi, with the remaining additional taxable sales attributed to personal loans and credit card charges. The department requested ARC provide a copy of the resale certificate and a detailed listing of related sales for resale transactions. ARC provided a copy of the resale certificate from Mr. Junaidi, dated April 1st, 2018, Exhibit G, but did not provide a detailed listing of the alleged sales for resale transactions. Therefore, the department was unable to verify or quantify any valid sales for resale. With respect to the contention that the remaining additional taxable sales were due to personal loans and credit card charges, no supporting documentation was provided to the department. As a result, the department found that no adjustments were warranted to the measure of unreported taxable sales. In the case at hand, appellant contends that ARC's liability was due to the auditor relying on paperwork to estimate the liability. However, as already discussed, the books and records ARC provided upon audit, particularly its federal income tax returns and bank statements, reflected substantially higher sales than reported in its sales and use tax returns for the audit liability period. When it is determined that a taxpayer's records are such that sales cannot be verified by a direct audit approach, the auditor must examine the sales from whatever information is available. Because ARC sales and use tax returns were not reliable, the department calculated the audited taxable sales using ARC's daily sales worksheets, which reconciled with its sales and use tax returns to establish unreported taxable sales. Appellant also contends that ARC provided resale certificates during the audit, which the department failed to take into consideration. As already discussed, the only resale certificate ARC provided was from Mr. Junaidi. ARC asserted this resale certificate as supports alleged sales for resale totaling $398,000. As discussed in Exhibit J, the Appeals Bureau decision in the appeal of ARC, dated March 16th, 2023, ARC was repeatedly requested to provide a detailed list of the sales for resale transactions, but none were provided. given the lack of any specific information as to which transactions were sales for resale made to Mr. Junaidi during the audit liability period, the department cannot make adjustments to unreported taxable sales. We will now discuss the issue of whether appellant is personally liable for ARC's unpaid sales tax liability for the liability period pursuant to Revenue and Taxation Code Section 6829. On December 14th, 2021, the department issued a notice of dual determination to appellant, Exhibit B, for ARC's unpaid sales and use tax liabilities, plus interest and penalties, pursuant to Section 6829. Section 6829 and Regulation 1702.5 provide that a person is personally liable for the tax, penalties, and interest owed by a business entity if the following four elements are met. 1, the business of the entity has terminated, dissolved, or abandoned. 2, sales tax reimbursement was collected on its sales of tangible personal property and the tax was not remitted to the department. 3, the person had control or supervision of, or was charged with the responsibility for, the filing of returns or the payment of tax, or was under a duty to act for the corporation to comply with the sales and use tax law. And lastly, the person willfully failed to pay taxes due or willfully failed to cause such taxes to be paid. The department is required to prove these four elements of Section 6829 by a preponderance of the evidence. With respect to the first element, termination, on June 6, 2019, appellant submitted a notice of closeout form, Exhibit A, at Exhibit 1, indicating that ARC closed its business on November 15, 2018. As a result, the department closed ARC seller's permit effective November 15, 2018. Therefore, the first element is satisfied. With respect to the second element, collection of sales tax reimbursement, the evidence shows that ARC's sales receipts during the liability period lists sales tax reimbursement as a separately stated item at Exhibit A at Exhibit 12. Furthermore, an account note from the department's Centralized Revenue Opportunity System, CROSS, Exhibit A at Exhibit 12, dated November 18, 2021, shows that ARC's former representative, Mr. Anwar, confirmed that sales tax reimbursement was included in the selling price of goods. Moreover, ARC's sales and use tax returns during the liability period, Exhibit A at Exhibit 6, indicate that sales tax was included in reported taxable sales on line 1. Based on this evidence, the second element is also satisfied. With respect to the third element, responsible person, appellant was an owner and officer of ARC and demonstrated that she had control of or responsibility for ARC's sales and use tax matters when she filed ARC's self-assessed partial or non-remittance sales and use tax returns for the fourth quarter of 2015 through the first quarter of 2017, the fourth quarter of 2017, and the fourth quarter of 2018. It's Exhibit A at Exhibit 6. Also, appellant is listed as ARC's Chief Executive Officer, Chief Financial Officer, Director, and Secretary on numerous filings with the Secretary of State. An appellant identifies herself as ARC's owner or president on various documents throughout the liability period. Exhibit A at Exhibits 1, 3, and 7 through 10. Furthermore, as noted in Exhibit D, several Automated Compliance Management System, ACMS entries dated July 15th, 2014, September 5th, 2014, March 24th, 2014, and June 15th, 2016. Appellant engaged in discussions with department staff concerning ARC's delinquent taxes, sales and use tax returns, and payments. Lastly, as evidenced in Exhibit A at Exhibit 4, appellant identified herself as ARC's CEO and Vice President on state income tax returns for 2014 and 2016, respectively. Thus, it is clear that appellant had control of and responsibility for ARC's sales and use tax matters throughout the liability period. Therefore, the third element is also satisfied. The final element we will discuss is willfulness. Willfully fails to pay or to cause to be paid means that a person's failure to pay the liabilities at issue was the result of an intentional, conscious, and voluntary course of action. This failure may be willful even if it is not done with a bad purpose or motive. In order to show willfulness, the department must establish all of the following. First, on or after the date the taxes came due, the responsible person had actual knowledge that the taxes were due but not being paid. Next, the responsible person had the authority to pay the taxes or to cause them to be paid, one, on the date the taxes became due, and two, when the responsible person had actual knowledge. And lastly, when the responsible person had actual knowledge, the responsible person had the ability to pay the taxes, but chose not to do so. As already discussed, ARC's sales tax liabilities stem from the audit liability period and self-assessed sales and use tax returns filed with partial or no remittance for fourth quarter 17, third quarter 18, and for the period October 1st, 2018 through November 15th, 2018. With respect to appellant's actual knowledge for the audit liability, the department issued a notice of determination dated October 30th, 2018, Exhibit E, to ARC for taxes assessed for the audit liability period. As already discussed, the audit liability is based on differences between ARC's reported and recorded taxable sales, resulting in unreported taxable sales of more than $787,000, Exhibit F. As seen in Exhibit K, Schedule 12A, ARC consistently underreported taxable sales during the audit liability period. As ARC CEO and president throughout the liability period, appellant had direct knowledge regarding ARC's sales and use tax matters. As memorialized in an ACMS note dated March 24th, 2015, Exhibit D, appellant spoke to the department regarding an online payment plan, which is evidence that appellant knew of ARC's unpaid sales tax liability for periods prior to first quarter 15. Furthermore, for the period fourth quarter 15 through first quarter 17, appellant electronically filed ARC's partial and non-remittance sales and use tax returns, which is evidence that appellant knew the taxes for those periods were not paid when due, because she declared the tax was owed but made only a partial or no payment at all. Moreover, given appellant's involvement in ARC's sales and use tax matter during the audit liability period, she had access to ARC's financial records showing almost $800,000 in unreported taxable sales during that period. All of this evidence shows that appellant had actual knowledge that ARC was underreporting its taxable sales for the audit liability period at the time it filed its sales and use tax returns. With respect to ARC's sales and use tax returns for fourth quarter 17 and the period October 1st, 2018 through November 15th, 2018, as seen in Exhibit A at Exhibit 6, appellant electronically filed these sales and use tax returns, specifically filing a self-assessed partial remittance return for fourth quarter 17 on January 28th, 2018, and a self-assessed non-remittance return for the period October 1st, 2018 through November 15th, 2018. And this return was filed on March 17th, 2019. These taxes became due on January 31st, 2018 and January 31st, 2019, respectively. By filing these sales and use tax returns, appellant necessarily knew that these taxes were due but not being paid when they became due, as she self-declared ARC's tax liability for each of those periods, but remitted only a partial payment or no payment at all. With respect to ARC's third quarter 18 liability, as seen in Exhibit A at Exhibit 6, a self-assessed non-remittance return was filed on October 31st, 2018. Although department records do not show that appellant filed the return, appellant was a person responsible for ARC's sales and use tax matters for the entire liability period and filed a majority of the sales and use tax returns, both before and after third quarter 18. Furthermore, appellant actively participated in ARC's sales and use tax matters during this period by signing a power of attorney as ARC's president on August 25th, 2018, appointing Mr. Shahatid as ARC's representative. See Exhibit A at Exhibit 9. Appellant also continued to be actively involved in ARC's sales and use tax matters during the quarter immediate following this period by signing the Notice of Closeout form on November 15th, 2018, Exhibit A at Exhibit 1, Exhibit A at Exhibit 10, and by filing ARC's sales and use tax returns for the period October 1st, 2018 through November 15th, 2018. Taken together, the foregoing supports a finding that appellant had actual knowledge that ARC's third quarter 18 tax liability was not paid when it became due. Based on all of the foregoing evidence, the first requirement of willfulness has been met. With respect to the second requirement of willfulness, authority, appellant was ARC's CEO and president during the liability period and represented to the department that she had authority to pay or to cause to be paid ARC's tax liabilities. As seen in Exhibit D, ACMS entries from September 5th, 2014 and March 24th, 2015, appellant engaged in discussions with department staff requesting to make monthly payments to pay ARC's delinquent taxes. As also seen in Exhibit D, an ACMS entry on June 15th, 2016, appellant discussed filing their return for first quarter 16 and making half of the payment. This evidence shows that appellant had authority to pay ARC's liability or to cause them to be paid when the taxes became due and when she had actual knowledge that the taxes were due but not being paid. Therefore, the second requirement of willfulness has been met. With respect to the third element of willfulness, ability to pay, ARC had sufficient funds available during the liability period, as seen in Exhibit A at Exhibit 11. Records showing that ARC received credit card payments and the amount of approximately $1.2 million between October 1st, 2014 and March 31st, 2019.
Thank you. I'll turn to the panel now and ask if they have any questions. Hearing Officer Wilson, do you have any questions?
I do not have any questions. Thanks.
Thanks. And Judge Turner, did you have any questions?
Yeah, one question about the resale certificates. The resale certificate was provided by the taxpayer. Was the I'm forgetting the name of the alleged purchaser. Was he identified as a retailer, having a retail certificate or having a permit for resale or for sale?
Hi, Judge Turner. This is Jason Parker. The seller's permit number and the name is accurate.
Okay.
Time periods. One thing I would like to point out on the resale certificate, you can see that they dated it April 1st of 2014. However, the revision date on this form wasn't revised until August of 2017. So obviously the taxpayer could not have, or the customer could not have issued this form on April 1st of 2014. So just wanted to make sure that's clear.
Yeah, but you wouldn't say it was uncommon for retailers with using a resale certificate to date them relative to when they began purchasing for resale, would you?
We could look at a backdated resale certificate and similar to our XYZ letter process that we do and determine whether the resales are in fact resales. And we looked at this and we looked at the information in our system and we couldn't confirm that the customer reseller actually purchased anything from this taxpayer, let alone the volume that they're claiming to have purchased.
Understood. Yeah, I was just trying to clarify that the point on the resale certificate wasn't that the retailer wasn't identified as a retailer, or I presume as well the category of sales they're alleged to have purchased for that resale. It's simply about the lack of substantiation of connecting specific transactions to this retailer. Is that right?
That's correct. There's no evidence in the record that they actually made sales to this person, to this seller. So without the documentation, obviously we, and all the other information on the resale certificate and what we looked at, it's evident to us that there were no resale transactions to this customer.
Understood. Thank you.
Okay, thank you. And I had a question. I was just confirming the liability period. In the pre-hearing conference statement, it said it was July 1st, 2014 to November 15th, 2018, and maybe you said that here. But also in the brief, in CTFA's opening brief, it just says the periods are July 14th, 2014 to June 30th, 2017. And then August 1st, 2017 to December 31st, 2017. And then July 1st, 2018 through November 15th, 2018. And the last two periods are from self-assessed returns, and the first one is related to the determination of the CUTFA. I don't know. Could you confirm what the periods are?
Yes. So the audit liability period is July 1st, 2014 through June 30th, 2017. And then the other periods of liability are fourth quarter 17, third quarter 18, and part of fourth quarter 18, which is October 1st, 2018 through November 15th, 2018.
Okay. You said October 1st. Okay. All right. And also, did you state there were some returns that there was no record of being filed? I think you may have mentioned that, if you recall.
Some returns were not filed by appellant, but for the period, there were returns filed.
Okay. Oh, so just not a record of appellant filing them, but the accountant?
Yes.
Okay.
Yes.
Okay. But every period at issue, there is a return that was filed, at least?
Yes, for the audit liability, there were returns filed, but there was additional liabilities assessed pursuant to the notice of determination issued to ARC. And then with respect to the other three periods, which is fourth quarter 17, third quarter 18, and October 1st, 2018 through November 15th, 2018, appellant filed fourth quarter 17 and October 1st, 2018 through November 15th, 2018, but she did not file third quarter 18.
Okay. Okay. Thank you for clarifying.
No problem. Sorry, it's a mouthful there.
Yeah, no, it's helpful. Okay, so Mr. Shatit, you could take this time to make your closing remarks if you're ready, for 10 minutes, and you can proceed whenever you're ready.
Okay, thank you, sir. Appreciate it. I was listening to almost half an hour of this presentation, and basically they're claiming that my client collect sales tax and did not remit it, and that is totally wrong. My client, this is total sales, and he said they collect the tax. Whatever they collect, they report. All the sales and tax collected was reported to the state. There was, when they say there is taxable sales, that there is money and they did not remit it, that is totally wrong statement. Every tax collected from the sales was remitted in sales and use tax return that filed with the department. When the auditor show up, my client, give him all the books and records. So they cannot claim they don't have books and records. If they have books and records, they supposed to have tax collected, or what they call it, accrual tax. Why the auditor did not check that? If he think that they owe that much money, why didn't he spend time or she spend time to verify it? Now you are telling me my client owe that much money, but there is no evidence behind it that these are taxable sales. Now we are questioning sales and resale certificate. And the department person said, oh, probably there is no resale. I know, I was an auditor. When there is a resale card, I can pick up the phone and call the customer and I say, did you buy this product from this person? I can verify it from the third party. You don't have to verify it from when, especially this amount. This is too much money for resale. But anyways, my client, and then they say the period between the audit and the 2018, when they file the tax, they remitted. When there is no remittance, usually the collectors involved and they go collect the tax. Why this did not happen, I have no clue. But anyways, my client is not responsible for this tax. She has an accountant and a manager who handle the stores. Whatever sales and use tax collected was paid to the tax authority, and there is no tax discrepancies between what is collected and what is reported. Thank you.
Thank you. I'll ask my co-panelists one more time if there's any final questions. Hearing Officer Wilson, did you have any questions?
I do have a question. In regards to the tax collected, Mr. Shahati, did you provide any of the sales worksheets for the record?
Not with me, but they have it. When they ask for the books and records, we provide them with bank statement, with books and with the daily sales. We provide them with the bank statement, with the federal income tax return. Any records that they ask, we provided. But I didn't have the record for it. I am not their accountant, neither I am, get involved in any of this liability. And I'm just a middleman between the auditor and the the tax authority. Thank you.
Okay, so just to clarify, there are no sales worksheets in the record or Z tapes?
They should have it, but they didn't ask for it. I mean, I don't know when they get involved with the accountant, because basically they were involved with the accountant. I came after the fact that they already have the books and records, and the audit is almost done.
Okay, thank you. Also, another question, you mentioned the sales for resale of 398,000, and then I noticed in the report of audit discussion, or report of discussion of audit findings, that the audit principal noted that you provided a breakdown for that 398,000.
No, I
Um,
did. I asked my taxpayer to provide the details, and he said because of the period that passed, they could not find out if the taxpayer. But they say all the books and record is with the other person, and he provide the sales and resale certificate for them. Usually, if you accept the resale certificate in good faith, you don't have to go with the details. But the amount, I think that's what they identified, 397,000, I think.
Okay, I was just clarifying because the report of discussion says that you provided a breakdown along with the resale certificate showing 60,000 for third quarter 14, 98,000 for 2015, 120,000 for 2016, and 120,000 for 2017. My question was, how did you determine those amounts?
When they ask me about the details, I ask the taxpayer, and usually, I mean, the client, and the client provide these numbers for
Okay, and
per year, but no more details.
okay, so he didn't have any anything to provide to support those numbers?
At that time, no.
Okay. That's all the questions I have. Thank you.
Thank you. But I just want to mention one thing, that the department has the resale number for this person, and they have all the connection details because he has a resale number. When you have a resale, it means you fill up an application that has everything about this person. Where does he operate? What does he do? And all the stuff. So the auditor did not take a few minutes from his time to verify it, or I don't know what happened. Thank you.
Okay, thank you. Judge Turner, did you have any questions?
No, thank you.
Okay, thank you. So if there's nothing further, I'm going to conclude the hearing. And I want to thank both parties for appearing today. We will issue a written opinion within 100 days. The record is now closed, and there's no more hearings scheduled for the day. Thanks.
Thank you very much, everybody. I appreciate everybody participating.